Deciding between an LLC, a corporation, or the S-Corp status can be really confusing. At Trademarkia, we have many clients who are unsure of which one to pick, so we're here to help you out. It's important to call out that LLCs and corporations both shield owners from being personally liable for business debt or legal issues. Using either of these two formations will help protect your personal assets, such as your house or your car. Now, let's go over both options and see which one is right for your business. Let's start with an LLC. LLC stands for Limited Liability Company. Typically, LLCs are popular among small business owners because there is less paperwork and overall less hassle. Think of an LLC as a modular, cozy studio apartment where you get all of your basic needs met. You have a bed, kitchen, bathroom, everything you need to operate, but it can also be adapted to add more rooms if it becomes a multi-person household. Another important factor is taxes. When it comes to taxes, single-member LLCs are taxed as sole proprietorships, while multi-member LLCs are taxed as partnerships. For example, if you are the sole owner of a lemonade stand, you pay taxes like a sole proprietorship. But if you and your friend both own the lemonade stand, you pay taxes as a partnership under the LLC. To establish your LLC, the process can vary from state to state, but typically it can take anywhere from a few days to a few weeks. Remember, because of how LLCs are taxed, this will be less attractive to investors. Most venture capital firms prefer a corporation because you can issue stock in exchange for money. LLCs are typically preferred by small to medium-sized businesses who typically aren't looking for funding. Now let's talk about a corporation, which can choose to be taxed as either a C corporation or an S corporation. Think of a corporation like a large traditional mansion. It's impressive and built to handle substantial activities such as large-scale operations and significant profits. However, maintaining it involves certain costs like double taxation. A C corporation, or C Corp, is the most complex structure. It's like a big lemonade factory with lots of different flavors and many friends helping out. But with a C Corp, you pay taxes twice. Once when the factory makes money, and again when you share that money with your friends. This is called double taxation. C Corp are often used by large businesses that want to attract many investors and might even go public. On the other hand, an S corporation, or S Corp, is a tax status that a corporation or LLC can elect. Think of an S-Corp like a townhouse community with a specific set of community rules. It helps avoid double taxation, which means the company itself doesn't pay taxes on its profits. Instead, the profits go to the shareholders, who then pay taxes on their individual returns. However, there are a few key things to keep in mind. 1, you can only have up to 100 shareholders. 2, it involves more paperwork and is more complex than an LLC. 3, there are specific rules you must follow, including eligibility requirements and limits on the types of stock you can issue. And as you navigate these choices, remember that having the right tools and partners can make a big difference. Contact Trademarkia today to see which one is right for your business and get your business up and running.
Protect your brand with Trademarkia. Register your trademark on trademarkia.com.